Hello investors and welcome back to the channel. I am Mitali Thoke here to simplify mutual fund investing and guide you on a smarter wealth creation journey. As we enter the third quarter for financial year 2025-26, investors are witnessing one of the most complicated macro landscapes in recent history. From US-China trade tensions to a tense situation in the Middle Eastern tensions have emphasized the volatility in commodity, currency and equity markets. In this uncertain climate, mutual funds that carry tactical flexibility with long-term conviction may have a potential to offer better performance. Top fund managers of 2025 are not merely beating benchmark, they are seen managing volatility with conviction. There is also a change in investor sentiment, the increasing desire for aggressive but well-run high-return schemes, particularly those investing in industries facing boost from PLI incentives, infrastructure growth and digitalization. In today's video, we'll explore 5 high-return mutual funds along the equity spectrum on the basis of 5 years rolling CAGR, judicious managerial vision and future-oriented allocation with fine-tuned risk management. Before we move on, please note this video is for information purpose only. It is not a mutual fund recommendation and should not be considered as such. There is no opinion or view on any scheme covered herein. First is the Nippon India Small Cap Fund. The fund seeks to identify strong fundamental small cap companies with high growth opportunities to participate in early stage opportunities while adopting a disciplined diversification approach for long-term wealth creation. Over the past 5 years, the fund has provided a rolling CAGR of 36.71%, demonstrating stable risk-adjusted returns and its skill at finding scalable sound fundamentals within the space of small cap. As of August 2025, Nippon India Small Cap Fund has assets under its management of Rs 648.21 billion, with 66.9% in small cap stocks, 14.8% in mid caps and 11.9% in large caps. Top stocks in the portfolio are Multi Commodity Exchange of India Limited 2.1%, HDFC Bank 1.9% and Kirloskar Brothers 1.3%, showing a portfolio of structural growth, narratives in the space of digital transformation, renewable power and precision engineering. Sector exposure is dominated by capital goods 11.3%, healthcare 8.4% and chemicals 8.1%, showing a growth focused but diversified exposure to domestic manufacturing, consumption and innovation driven sectors in the small cap space. Second is the ICICI Prudential Infrastructure Fund, which looks for quality infrastructure stocks that stand to gain from India's increasing requirement for strong physical and social infrastructure, blending with growth opportunities with a conservative risk structure to create long-term wealth. Over the past 5 years, the fund has clocked a rolling CAGR of 35.07%, demonstrating consistent risk-adjusted returns by riding the growth of the increasing infrastructure space backed by government support and private investment. As of August 2025, ICICI Prudential Infrastructure Fund manages assets worth 76.45 billion, investing 18.7% in infrastructure space, with the remainder diversified across sectors that support infrastructure growth, including energy, engineering and industrials. Top holdings include L&T at 9.4%, NTPC at 4.7%, and Adani Ports and Special Economic Zone 3.8%, reflecting a focus on large, market-leading infrastructure companies with strong execution capabilities. Sector exposure is focused in banking 10.1%, power 8.2% and crude oil 8.2%, reinforcing the fund's focus on chief drivers of India's growth. Third is the Motilal Oswal Midcap Fund, which invests in high-quality mid-cap funds with enduring competitive advantage and sound business models to capitalize on their growth opportunities while ensuring disciplined risk management for long-term wealth creation. Over the past 5 years, the fund has provided a rolling CAGR of 34.97%, which is a consistent risk-adjusted return backed by a bottom-up stock selection methodology focused on sustainable growth prospects in the mid-cap segment. As of August 2025, Motilal Oswal Midcap Fund has assets under its management worth 347.7 billion, with a mid-cap stock base of 76.02%, backed by 21.37% in large caps, 2.6% in small caps, maintaining a balance between growth and stability. Top positions are held by Dixon Technology 10.1%, Coforge 9.7% and Trent 9.1%, reflecting its preference for quality companies in chemicals and technology space for long-term growth. Sector exposure is concentrated in IT 27.9%, retailing 18.1% and electricals 14%, reflecting a diversified strategy with mix of cyclical and secular growth drivers in the mid-cap space. Fourth is the Edelweiss Midcap Fund. It targets investment in quality mid-cap firms with high growth visibility and sound fundamentals, with the goal to leverage the building opportunities in India's mid-cap space while mitigating risk through diversification and stringent stock selection. Over the past 5 years, the fund has achieved a rolling CAGR of 32.5%, an indication of its success in delivering risk-adjusted returns by spotting fundamentally strong businesses with sustainable growth. As of August 2025, Edelweiss Midcap Fund holds assets valued at 75.48 billion, with 70.2% portfolio holding in mid-cap equities supported by 15.7% in large caps and 8.9% in small cap holding. Persistent Systems 3.1%, Max Healthcare Institute 3% and Coforge 2.9% are the top holdings. Sector exposure is concentrated in finance 14.5%, automobile and ancillaries 10.8% and healthcare in 10.7%, reflecting a diversified strategy with a combination of secular growth themes and cyclical possibilities in the mid-cap space. Fifth is the DSP India Tiger Fund, which invests in businesses likely to gain from India's infrastructure growth and economic reforms. Focusing on a thematic strategy of targeting capital-intensive, reform-driven sectors, the fund looks to generate long-term wealth through structural growth opportunities. Over the past 5 years, the fund has produced a rolling CAGR of 32.35%, a testimony to consistent performance fueled by exposure to infrastructure, manufacturing and reform-related sectors, which form an intrinsic part of India's long-term growth narrative. As of August 2025, DSP India Tiger Fund has 53.03 billion in assets under management. It is invested in a mix of market capitalization and sectors that are direct or indirect beneficiaries of India's growth engines such as engineering, power, transportation and raw materials, with flexibility to fine-tune in light of macroeconomic and policy changes. Top positions are L&T at 4.7%, NTPC at 4.4% and Apollo Hospital Enterprises at 3.5%, showing a heavy preference for execution-intensive and policy-supported firms with consistency of performance. Sector allocation is heavily in capital goods 12.9%, infrastructure 11.2% and power 7.45%, reflecting the thematic focus of the fund on infrastructure while being diversified across sectors that are driven by reforms. Now to conclude, the 5 high return funds featured here illustrate how rigorous strategy, industry expertise and opportune assets allocation could result in a solid performance, particularly when backed by macroeconomic forces like domestic policy changes, consumption growth and infrastructure momentum. However, high return does not come without risk. Most of these funds entail exposure to mid and small cap stocks, thematic industries or cyclical sectors, all of which may face higher volatility in global shocks or local slowdowns. Even top performing funds need precise entry timing, disciplined monitoring and mapping to one's personal financial objectives and risk tolerance. The secret is not to pursue returns alone, but to discern the structure and strategy behind them. In today's environment where policy is fluid, interest rates are still high and global uncertainty lingers, mutual fund choice has to look beyond the past. A solidly balanced portfolio will complement return potential with stability. High-performing mutual funds could be a potent force in building long-term riches if and only if they are selected with complete knowledge of the risk that accompanies them. So if you found this video helpful, do not forget to hit that like button and share it with your fellow investors. For more expert insights on mutual fund investments, be sure to check out the related videos and articles linked below. And if you are new to the channel, hit subscribe and tap the bell icon so you never miss an update on smart investing strategies. Signing off for now, invest wisely, happy investing. Mutual fund investments are subject to market risk. Read all scheme related documents carefully. Registration granted by SEBI, enlistment as IA with exchange and certification from NISM is no way guarantee performance of the intermediary or provide an assurance of returns to investors. Investment in securities market are subject to market risk. Read all the related documents carefully before investing.